Yep.
Hey, good morning. My name is Jordan Teets. I'm the owner of Jasmine Investments. We're a multifamily development company in Portland. I've done it for about 8 years in Portland. And today I'm here at one of my newer projects that we're about to break ground on, which is this really big lot. It's a 12,000 square foot lot, and I purchased it about a year and a half ago. And the plan is to build 9 detached homes on this lot. The homes are going to be 850 square feet, 2 bedroom, 1.5 bath. And this project really leverages the new city zoning program, which is called the cottage cluster zoning, which allows you to kind of do infill development on these larger lots while simultaneously dividing the lots into kind of their own separate parcels. So at the end of the project, we'll have 9 homes on their own, individual lots. And so I think it meets a real incredible demand in the city of Portland, which is kind of for more affordable housing for first-time home buyers. My strategy all these years has been to just build things to keep as long-term rentals, and I've found that in the climate with really high interest rates, there are a lot of people that were wanting to buy a house but can't quite do it. But they're not as interested in apartments and would prefer something detached or something a little bit nicer. And so this size of 2 bedrooms and this level of finish, I think kind of meets that market of, folks in their 20s and 30s looking for something a little bit nicer to rent. Yeah, the permitting took about a year and a half, going through the process with the city. And yeah, I'm really excited to say that we have already had the construction loan funded and probably should be breaking ground in about 2 or 3 weeks here. To tell you a little bit about the numbers, I purchased the lot for $200,000 and have spent about $150,000 on all the permits, entitlements, engineering, city fees, all that kind of stuff. And we just funded a construction loan that was $2,340,000. And with that loan, we took down the existing house that was here and starting to take all the garbage, but there's still a lot left. And the units appraised, all 9, at $425,000 each. So that's a total of $3,825,000. So it creates a kind of an equity opportunity of about 1.5 between the cost of the balance of the construction loan and the value at the end. And so overall, my money into the deal is about a little over $300,000. Yeah, and so it's an excellent opportunity where we'll build these and then we'll refinance them into long-term loans and then just keep them as long-term rentals. Yeah, this project we're looking to fundraise anywhere between $200,000 and $300,000 to kind of fund some of the reserves and contingency budget for the project. I've never had a project that doesn't have contingency situations, and so I'm just wanting to be proactive and just create a project that's useful. And because the equity is strong, there's 1.5 of equity in here. It's a very safe investment opportunity for any investor. And then to tell you a little bit about my track record, this is my 16th project in the city of Portland, and yeah, I've had a lot of success and luck in building a team that really acts on my behalf when I'm not there and really stewards all these projects from an idea in my head into something real. And so this project is the hard work of my architect, my engineers, and soon will start being the responsibility of my builder. And yeah, I've found a niche in kind of building units that are around this 700 square foot, 2 bedroom, 1 bath size, because I'm just trying to build things to keep as rentals. And I think there's always a demand for that kind of size for younger people that are just starting their careers or looking for something. And then usually folks, when they move out, they're moving to buy their first primary residence. So I think I kind of found that little niche and I'm just happy to stay with it. And I also think that in a market with interest rates at 7 and 8%, folks can rent these units for $2,000, $2,200. But if they were to buy them with the rates that they are at the price of $425, it would cost them $3,000. So there's always this market dynamic of my rental being cheaper than what it would cost someone to buy, and so they can kind of live in something nicer than they could afford to buy. And for me, I just like being able to kind of take advantage of the current situation and just try to, deal with a bad rate environment in a way that kind of, guides folks to our rentals because they can get a quality that they wouldn't be able to buy. And then in the background, you hear my daughter. But yeah, thank you so much for your interest. And, we're available to talk on the phone or on Zoom to just kind of tell you more about all the details.